Good evening, friends. This side Rahul Magan here, is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who takes positions in US, Europe, and Asia. But like I did repeat it many times, that our fund is a proprietary fund, which means no third party, whether you are a venture capitalist, you are a private equity, or whosoever, you cannot invest fund in our fund. Today, I would be covering a very important topic on currency volatility. Today is Sunday. You all know what is happening in crypto, whether this is Bitcoin, whether this is Ether, whether this is XRP, Litecoin, or any other coin. Without quoting any specific name, majority crypto coins are almost near to intrinsic value, and many are trading below intrinsic value. I deliberately not quoting the name of the crypto coins, those who are trading below intrinsic value, because there is no point sharing the name in the public domain. You know how people are, they take it otherwise. So I'm not sharing that names. Currency is also very, very volatile on the other side. Example, if we speak about Australian dollar, if we speak about New Zealand dollar, if we speak about, Swiss franc, Canadian dollar, Japanese yen, then the currencies are highly volatile in nature. As we speak, Indian rupee is near about 78. Indian rupee is near about 78. Now in this video, I would like to discuss the impact of this volatility in the books of the corporate sector and how a normal trader can take the benefit of that. When we speak about the currency volatility, then in India, there are limited companies who are forced to have the currency volatility. Example, the IT companies. Like we have TCS, we have Infosys, we have, Wipro, we have SCL. They are listed IT companies, but we have other non-listed IT companies, just like we have Cognizant, Capgemini, Accenture, and many non-listed IT companies. Now, IT companies are dealing with majority of currencies, just like IT companies are dealing with Australian dollar, New Zealand dollar, Canadian dollar, Singapore dollar, Japanese yen, Swiss franc, and all. Now the currencies are getting highly volatile. So let's take an example. Australian dollar, which was at 0.78 per dollar, which means 1 Australian dollar is equals to 0.78 US dollar, is now at 0.70. So in our parlance, it is called 8 big figure appreciation. 8 big figure from 0.78 to 0.70. Now assume yourself as an Australian exporter who is exporting iron ore, coal, or maybe any other thing outside Australia in dollar terms. You are practically gone. You are practically gone because the value of your receivable has fallen. So, and your cost is rising because inflation is rising. So you got a double hit. Number one, your inflation is rising. Number two, the central bank, Reserve Bank of Australia, who is hiking the rate. Number three, the value of your receivable came down substantially. Similar is the scenario with the New Zealand dollar. which used to be around 0.67 to 0.68 per dollar, now it is 0.60. Again, a big whammy for New Zealand dollar. Indian rupee is also not an exception anymore. Indian rupee is trading at near about 78. Today, as we speak, is 13th May as per calendar, but 12th May 2022. 14th May, which is 2 days from now, Federal Reserve would be deciding on the interest rate. And consensus is very clear, which is Federal Reserve is supposed to be hiked by at least 50 bips. Many international banks are saying Federal Reserve would be hiking by probably 75 bips also, but I doubt whether they are in a situation to hike 75 bips. They would be hiking only 50 bips. Now, if Federal Reserve would be hiking 50 bips, then dollar would be strong for a small period of time. Now, that period might be 1 month, probably 2 weeks, probably 3 weeks maximum. In this eventuality, we may see Indian rupee may depreciate further and touch 79. In this scenario, the importer community in India who imports, importer community is very big, and the largest importer community is the petro community. Petro community means the community who imports the petroleum and petroleum products, because 1/3 of the Indian, oil requirements is met, within India. Rest they are going to be importing. Now, these oil companies would be hitting double side because you are importing at 78, probably 79, and you may not be able to sell at the price in the market, because if you would be selling the price at the market, then the government won't allow you. For a while, we assume government would allow you, then the inflation would be skyrocket, which is already a skyrocket. In this eventuality, the oil companies needs to take the hit in their pocket, which, by the way, is also not a good sign, because their profitability, their positive retained earnings, and all these would substantially came down. The other import community who is importing machine, plants, fixtures, and all these items, they would also be facing a big hit. So let's take an example of a, I would say aluminium company, any aluminium company. They importing the smelters. Smelters means basically the plant where you make the aluminium. They import smelters outside India. Now, commodities are already very volatile. One day they are here, another day they are here, third day they are here, fourth day they are here. Example, nickel. Example, aluminium. Example, copper. Now the aluminium company who is importing the smelter, they would get a big hit because they are importing at around 79 or 80. And you know that the smelter cost is not 1 lakh, 2 lakh. It's a huge money they're going to be deploying. Companies like L&T, Larsen and Toubro, who are engineering conglomerate, making big plants, engineering project, power plants and whatnot, they import substantially whatever their requirements are. So everyone, whether you are a small importer, whether you are a big importer, or you are a petro importer, you all would hit substantially. That's a fact. Since you all would be hitting substantially, this would dent the balance sheets of India. By India, I don't mean government of India. I mean the corporate sector of India. Now think about Tata Steel, Tata Motors, Tata Power, and many such companies who have huge debt in their books. Now what? The rates, repo rate is going up, rupee is going up, double attack. Guys, to conclude, this isn't the right time to invest in debt-ridden companies. I'm doing my duty by warning you. Rest is up to you whether you take this or you disregard this. That is completely on you. Because the next few months, minimum 6 to 7 months, are not going to be easy if you are thinking. Probably we may see something which no one envisaged. Let it be honest. No one envisaged. Keeping this, it would be good to stay away from debt-ridden companies because repo rate is going up, rupee is going up, which by the way is not good for debt-ridden companies. Rest is completely your call, how you would like to take this. I always warn people take it, others don't take it. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, 9899242978. Let me repeat, 9899242978.